Who is willing to remind us what we were discussing last week?
We were studying about variance.
Variance analysis. Okay, thank you.
Yeah.
One variance you remember, Bwana Duncan?
There is material cost variance,
Okay.
material price variance, and also material usage variance. That is what I can remember.
Okay, thank you.
And
Thank
I
you
remember
for
the
reminding.
formula. The
Yeah.
formula is that, also remember the formula for variance is standard minus actual.
Yeah. That's true. For us to get variance analysis, we compare standard minus actual, and we started off by defining standard. So we said even those that we will not have done, you can still do the comparison as long as you are comparing actual versus standard versus actual. Then you also must know how to interpret, and interpretation is either adverse or favorable. There's no other interpretation, and we don't necessarily recognize negative. So you don't tell us it's -10. You only need to tell us it's 10 adverse or favorable. So thank you, Bwana Duncan, for reminding us. So now we want to move to the next part of our discussion, next topic, and we want to discuss about the costing methods. Costing methods. Now, with the costing methods, just a minute, I see the notes that are available so that I'm able to display. Sorry, no. Last week we had said we will do budget. That's the topic 6. So let's schedule for costing. We'll deal with it the next class. So let's deal with the budget. If at all time allows, we can introduce some costing methods. So who can define for us the term budget? Who can define for us the term budget? Hello? Yeah. Okay, so thank you. Duncan, you have said the spending plan based on income and expenditure very well. Beatrice, you have said it's financial estimate of income and expenditure very well. And that's very prudent. When you talk about budget, we are necessarily talking about how much money are we estimating to get and how much money are we estimating to spend. And I'll give you a sample. Let me open a whiteboard and give you a sample, and you tell me if this is a prudent budget or not. I have a friend who intends to do a wedding, and this is the much. This is the much he estimates. So this friend of mine estimates to have a wedding that will cost this much, 950,000. That's the budget. The couple have contributed a lot of money. That's 30,000. 30,000. That's what they have pledged to contribute. But the total budget for the wedding will cost 950,000. To your perspective, do you think that's a realistic budget to you, according to you? Hello, class. Do you think for that couple, that's a realistic budget? They intend to do a wedding with the 950,000, and the couple have already contributed or can only contribute 30,000. So they expect the others to be contributed from friends. Do you think that will be realized?
No.
Anfield, no. Dan, yes, come up.
I'm saying that is a no.
Yeah.
It's a big no because at least if they wanted to do a wedding, they could have at least 75%, at least 75% of what they require.
Yeah.
Yeah, so that is unrealistic. So it will strain other people to contribute towards that wedding.
Will it strain or it will keep off? Because now if you are willing to contribute 1,000 shillings and you're looking at the baggage, you feel 1,000 shillings is insignificant, you rather keep off. Huh? So even if they are your friends, you start keeping off or shying away because that baggage is too high. You get it? Yes, you have said. Now, that's not whatever they are doing, it's a wishful thinking. It's not a budget, because when you're estimating a budget, you must come up with how much money are you able to raise before you come up with how much money are you able to spend. Now, if they have only estimated what they want to spend and they have not estimated what they can raise, in that case, they just have wishes and not budget. So there are several types of budgets, and you can look at from the notes, but there's a specific budget that I would like us to do practically together. Just a minute, I get one budget that I would like us to see its preparation. So now we want to do a cash budget. I want to prepare a cash budget. Now, the reason why we want to prepare a cash budget, that most of the businesses do close down, not because they are not making profit, but because they did not manage their cash. And we can start by, if you know any business that recently closed, yet there are no indication that it's going to close down. Do you know of any business that has closed or is suffering, and it has been performing very well, but all of a sudden it starts suffering? Shortly, you find they have closed branches, they have closed a number of operations. Any business you can mention?
Mumias.
Tuskys, yes. Now, these businesses you are mentioning, like if we use the case of Mumias, they were making profit. Then all of a sudden, they started issuing profit warning Then after profit warning, they had a downward trend in their performance. Then it means they could have sent this money to other ventures that were not going to give them return on cash. Now, when you divert money that was meant for business operation to other expenditures, then you create a loophole. Now, this loophole you create, it reach a point when you are supposed to pay salaries for employees, you find you don't have money to pay for those salaries. Then those employees will eventually start putting pressure on management, demanding their salaries. Then, as they put on pressure, there could be other suppliers that you have also not paid. So, some of those suppliers are crucial, are supply of crucial items. So, if they stop supplying, then that means you cannot produce anymore. So, if you fail to produce, then you'll eventually not be in business, and ultimately you'll have to close the business. That's why we need to prepare a cash budget and compare and prepare cash budget and then see how it's useful to organization. So I'm displaying a question, and I'll give you about 3 to 5 minutes. You write down that particular question, then we handle it together. So note down that particular question. I'll give you 2 minutes, and then I scroll down to the other parts. You note it down. Then once you have noted it down, we'll solve it together.
excuse me, teacher? Teacher?
Getting
Hello?
the question? Yes?
Please, can you scroll up again? Please.
Okay. Hello, class. Are you through? Hello, Ian.
A bit kidogo tu teacher on my side. Please
No,
wait.
not yet.
On my side.
So I give
Kidogo
you
tu.
another 1 minute. Okay,
2.
2 minutes. Once you're ready, post on the chat. I'll be able to see. Dalmas is ready. Who else is ready? At least 3 people. Once you confirm, we start now the computation. Okay, Dan is ready. The third person, confirm.
I can't see.
Good evening once more. I got disconnected. Confirm if you can hear me now.
Yes.
Okay. Did everybody conclude get the question? Did everybody copy the question, or is there anybody who is still stuck? Okay, and let me open a whiteboard. We solve. So such a question, when you get such a question, it's prudent. It's prudent that we identify money out and money in. So for us to identify money in, then we'll have on the other side money out. So we want to identify, and for us to do that, we read the additional information one by one. So I would like to request a volunteer. Somebody will read us first additional information. Okay, we can start from the top, from the question. Who is volunteering to read the first part? Hello?
Let me read.
Yes, read.
Cash budget class practical. Franco
Yes.
Company Limited values, advertises and sells residential property for only a short time and is preparing a cash budget for the first 4 months for 2018. The expected sales of residential properties are as follows. Then we have the box, the table. We have the month column and we have the units sold. Under the months, we have 2018 December, then we have 2019 January, 2019 February, 2019 March and April. Then under the units sold, we have 10, 10, 15, 25 and 30.
Yeah.
Then under I continue, Amma.
Now, let me interpret that, then we go to additional information.
Okay.
Now, this is what it means. This company, they value, advertise, and sell residential property for only a short time, and is for that purpose. This company does not construct their own houses. So they are not dealing with the business of selling their own houses. They only advertise. That means once I've constructed a house and I want to sell, rather than hustling to look for a buyer, I go and talk to this Farmco company. They will identify a buyer. Then once they've identified a buyer, they will be able to sell that particular house. I hope that's clear to all of us. Now, you can read for us additional information number 1.
Okay, so we have Roman 1, the average price of each property. Keep quiet. The average price of each property is 180 shillings. And Framco, actually it's Framco. Sorry, me I wrote Franco. Poleni. The average price of each property is 180,000 and Farmco, actually it's Farmco. And Farmco company charges a fee of 3% of value for each property sold. Farmco receives 1% in the month of sale and 2% in the month after sale.
Okay. So now, one, we have identified that this company does not sell their own houses. So it's people who have private developers who develop the houses. Then now they request Farmco to value those houses and advertise and sell. And then once they've sold, they charge a commission. And this commission is 3%. And this 3% is paid into installment. So we have commission as their money in. So commission 1, we have 1%. Then commission 2, they'll collect another 2% to make it total of 3%. I hope up to that end, nobody's lost. You can read for us the second statement.
Roman 2, the company had 9 employees who are paid on monthly basis. The average salary per employee is 35,000 per year. If more than 20 properties are sold in a given month, each employee is paid the bonus of 140 shillings for each additional property sold.
So thank you. Now on that point, it's giving us 2 elements of money out. The first element is on salary. And remember, when we prepare cash budget, we'll prepare on monthly basis. So we'll evaluate monthly salary. Then other than salary, there's also bonus. There's also bonus. So this company has 9 employees and we want to estimate the monthly salary. Whiteboard is clumsy. Just a minute. Can use this stop. So the company pays 9 employees. And these 9 employees earn, each one of them earn a salary of 35,000. But this 35,000 is paid per year. So we want to multiply so that we see how much money does this company pay as salaries for the whole year. Then we divide it by 12 so that we are able to ascertain how much does the company pay per month. So anybody who can assist us do that computation?
$26,250.
Yeah?
26,250.
750.
Mwalimu, repeat. Teacher, unaweza rudia, please.
Okay, read the statement.
From my side, the statement says, the company had 9 employees who are paid a monthly basis. The average salary per employee is 35,000 per year. If more than 20 properties are sold in a given month, each employee is paid the bonus of 140 shillings for each additional property sold.
So in that case, we are talking about 2 avenues of cash out. The first avenue is salary. The second avenue is bonus. Now for bonus, we have been told it's 140. We'll multiply by the number of units if they sell any units above 20. So that's no problem. We'll go and compute once we get there. But now for salary, they are entitled to 35,000 for a whole year. And remember, when you're preparing cash budget, we'll prepare it on monthly basis. Now, for us to prepare it on a monthly basis, that means we'll do 9,000 times 35. Okay, 9 times 35,000. That 9 is number of employees that the company has. We multiply by 35 because each employee earns 35,000 for a whole year. Now, for that amount, once we get, we divide by 12 so that we are able to establish how much does the company pay as salary per month. And somebody has given us a figure of 26,750.
Not 750, 250.
Yeah, 250.
Yeah.
Okay, thank you. 17,250. Is there anybody who is lost up to that end? Okay. If nobody is lost, we can go to the next point.
Mwalimu, and the bonus?
I've said now for bonus, because it's not paid on a monthly basis, we'll only calculate the bonus when they are due to receive, because they will get bonus if they sell above 20 units. So the month that will get they have sold more than 20 units will calculate the bonus. Are together?
Okay.
Yeah. We can progress.
Okay, and then Roman 3, variable expenses are incurred at the rate of 0.5% of the value of each property sold, and these expenses are paid in the month of sale.
So we have variable expenses. So we'll record on our money out variable expenses. V, because I'm writing with the mouse, I will write in short expenses. So we'll be able to calculate now once we start off. Next.
We have 5. Farmco company pays interest, yes.
0.4.
4. Fixed overheads of 43,000 per month are paid in the month in which they arise.
Yes, we have fixed overhead. Fixed overhead. That's our money out. Next.
Farmco company pays interest every 3 months on a loan of 200,000 at the rate of 6% per year. The last interest payment in each year is paid in December.
So if we paid last interest in December, when do we expect to make next payment?
The next December.
No. Repeat reading that particular point for the members to understand.
It's saying Farmco pays interest every 3 months on a loan of 200,000 shillings at the rate of 6% per year. The last interest payment in each year is paid in December.
So if they usually pay 3 months, after every 3 months, the last one they paid in December. So when will the 3 month be due for payment?
March.
March, very well. So we'll pay in March, and then we'll pay in June, then we pay in September, then finally we pay in December. So we'll record under money out, we have interest. Interest. Next point.
Go back to the screen. Okay, yes. An outstanding tax liability of 95,800 is due to be paid in April. In the same month, the company intends to dispose of the surplus motor vehicle with net book value of 15,000 for 20,000 shillings.
So that statement has 2 elements. We have tax, which is money out. Have tax, which will record here, money out. Then we'll also have a sale of vehicle. Sale of vehicle. We move on. The next one.
The next one. The cash balance at the start of January 2019 is expected to be a deficit of 40,000 shillings.
So cash balance, that's what you have. So that's money in. So we'll write here cash balance. The next one.
Now you're required to prepare a cash budget for the period from January to April 2019, 20 marks.
Unaona vile hiyo ni marks rahisi ya kupata? Sasa nimesema unaona vile ni rahisi.
No comment, mwalimu.
So
It
far,
is well.
So
It
far
is well.
unaona haija kwa complex, ndio? So now
No.
we have identified the transactions. Now we want to go to computation now to prepare a cash budget. It's prudent that we identify those transactions because at times, okay, some of the transaction will not appear the first few months. And if we didn't make any those we didn't provide for those transactions, then it means we'll start fixing some figures, and our cash budget will eventually be very dirty. So just a minute, I clear my whiteboard. I had automated the clearance, but it didn't clear last week. I believe now it's clean. It's better now for use. Just a minute, I clear the whiteboard, and then we start making the cash budget. Dalmas, on your CV, have you written you are keen to details?
Me?
Yes.
Yes.
Yeah. So this question, its essence is to test if you are keen to details. You only follow instructions. You get it?
So I have a question. Niko na
Yes.
swali. Hapo kwa when we were starting kwa the money out, we haven't recorded the bonus because they didn't receive it yet, si ndio?
No, okay, we will identify the transaction that will appear on our cash budget. There's nowhere we have recorded money. So, yes, we are just identifying the transactions. And then after that, now we start the computation.
Okay.
Yeah. So, together with the others who have written on their CV, they are keen to details. This question is asking you if you are actually keen to details. So we follow instruction. We only follow what has been told. You don't have to cram. For this question, you don't have to cram. You only follow the instruction that has been provided. Did I have two whiteboards? Just a minute. So we draw the whiteboard. Our whiteboard is clear. So it's Farmco company cash budget. Then we'll draw this way. Have the second one. You said it's April to January to April.
Yes.
So April, March, February, January. Details. So we write here details. We'll make January here. Jan. We'll make Feb here. Feb. March. March. Then April. So with the cash budget, we record one item at a time. The first item we usually record on the cash budget is balance brought forward. Balance BF. You can write in full because I'm writing with the mouse and it takes sometimes I cannot write very fast. Balance brought forward. Then after balance brought forward, we record cash in. Cash inflow. Cash inflow. Now, under cash inflow, we had commission. Commission, 1%. Then we had another commission. 2%. Then we had sale of vehicle. Sale of vehicle. So we only had cash inflow twice, those three instances. Sale of vehicle. And then we'll have total. Have total. Now, once you have gotten total, we'll have cash outflow. Cash outflow. Because I erased you on my part and you have written, I will request you to assist me list them so that and just a minute, I will elongate this. Elongate this. So who is giving us the first cash outflow?
Salary.
A salary, thank you. The second one? Second one was bonus, huh? Salary and bonus were concurrent. The third one?
Variable expenses.
All right, V expenses. V expenses. Another one?
Fixed overhead.
So have fixed overhead. Overhead. For your revision, write in full. I'm writing abbreviation because I'm writing with the mouse. After fixed overhead.
Tax.
Tax. Tax. After tax.
Interest.
We had interest. After interest. After interest.
no any other. That is it.
That was the final, huh? Then we'll get total. Total. Then after we have recorded total, the last transaction will be balance carried down. Balance carried down. So let's now fill in our table and see how enjoyous it is. With the cash budget, when you get this question, this is usually 3 marks. You will actually appreciate the way we'll flow with it. So from the question, how much was the balance at the beginning of the year? How much was balance at the beginning of the year? Hello?
40,000.
Read the full information.
The cash balance at the start of January 2019 is expected to be a deficit of shillings 40,000.
Deficit, that means it's negative, huh?
Yes.
Negative 40,000. So come and record here 40,000. But negative. We move on now to cash inflow. Read for us additional information number 1. Somebody to read for us additional information number 1.
The average price for each property is Kenya shillings 180,000. And Farmco company charges a fee of 3% of the value for each property sold.
So, one property is valued at 180. And how many properties did we sell in January?
There were 19. 19. Oh.
In January, how many properties did we sell?
Two.
Okay.
How many properties did we sell in January?
10.
10. So 10 times 180?
Teacher,
Yeah?
hiyo 10 imekuja aje?
So tunaangalia kwa swali, how many properties were sold in January?
Oh, yeah, sorry. Pole.
Umeona ngapi?
10.
Yes, that 10 we multiply by the price per unit, which is 180,000. So how much money did they make from sale of the property?
1.8.
1.8. But remember, they are not, that 1.8 is not their money. They are only charging a commission. And that commission is 1% for that particular month. So we get 1% of 1.8.
$18,000.
18,000. So that's what we record here as cash inflow, or first cash inflow, 18,000. Now, because we are in January, and from the question, we have information in December, and that question is 2% is received in the month, okay, 1% in the month of sale and 2% in the month after sale. So now, we want to collect 2%. Do we collect from the month of February or do we collect it from month of December?
December.
December. Anybody with a contrary opinion? Anyone with a contrary opinion? If none, we are going with the December. With cash budget, we always we collect backwards. And the reason why we do collect backwards is that we are in January, we have not sold for February, so we cannot purport to be receiving payment for houses we will sell in February, yet we have not sold. Just like you are where you are working, we are in November and October now. You cannot claim your salary for November because you have not served for that particular month of November. So you only claim what you have already what you have worked for. So you have worked for January. So that's what you have worked for October. That's what you can claim. So in that case, we get 2% of sales in December. So in December, we sold 10 units. 10 times 180,000.
1.8.
1.8. Then we calculate 2% of 1.8.
36,000.
36,000. So that's what we record as a cash that will be received here. 36,000. Now, sale of vehicle. When did we sell our vehicle? When did we sell our vehicle?
April.
April.
In April. So in that case, so that it doesn't keep us bothering, we'll close for January, we'll close for February, we'll close for March. We deal with it once we get to April. Now, the next item, we get the total. So add the money starting with the balance brought forward. That's negative 40,000 plus 18,000 plus 36,000.
$14,000.
Yeah?
14,000.
14,000. That's what we record here as total. My pen is disappearing. Yes. 14,000. That's the total. So we go to cash out. Cash out. We had already calculated our salary. How much was our salary per month?
26,250.
250.
26,250. Just to notify you, of course, I can see some are sending messages. Once when I'm using whiteboard, I'm not able to read the messages. So you can just unmute and give us the response. Then we go to bonus. Were they entitled to get a bonus in January? Were they entitled to get a bonus in January?
No.
No. So we put a dash. Variable expenses. How do we collect? How much do we pay as variable expenses?
The paid at a rate of 0.5.
So 0.5 of the sales. So in that case, we get 0.5 because our sales was 1,800,000. We get 0.5 of that much. 0.5% of 1,800,000.
9,000.
9,000. So we record here 9,000.
Mwalimu, kindly repeat.
Said our variable expenses. Read our instruction on variable expenses.
Variable expenses are incurred at the rate of 0.5% of the value of each property sold, and these expenses are paid in the month of sale.
Okay. So how many properties were sold in a month of January?
10.
10. 10 times 180,000.
1.8.
1,800,000.
Yes.
Now multiply by 0.5%.
9,000.
That's what you have recorded there.
Okay, thank you.
Okay. Next, we go to fixed overhead. How much do we pay fixed overhead?
For the 3,000 per month.
43,000.
But in the month which they arise.
Yes.
Not every month, but in the month which they arise.
No, fixed overhead, because of the term that fixed, it means we pay them on a monthly basis. It's a fixed figure. So we'll record 43 for all the month. Tax. When did we pay tax? When did we pay tax?
The month of June.
June.
Yes.
April.
April. So we'll close January, we'll close February, we'll close March, so that we'll deal with it once we get to April. Interest. When will we pay interest? When are we expected to pay interest?
April.
Really?
March.
December.
I'm trying.
Somebody has mentioned December, somebody has mentioned March. Which is correct? Somebody to support one of the choices. April, March, December. Which one? Who supports the other?
Okay. According to me,
Yeah.
they said the company pays interest every 3 months on a loan of 200,000. That's at the rate of 6%. So the last interest payment in each year is paid in December.
Yeah.
Yeah, so in our case, we assume he has not paid. So meaning it will be paid in December. So if they have paid, so they'll pay in March. So in this case, I think it should be in March.
Yeah, it should be paid in March. That's correct. So we cancel January, we cancel February. We'll deal with it once we get to March. And now get the total. Total cash outflow. Get the total cash outflow. Whoever is ready. Yeah?
78,250.
78,000. Just terminate my pen. 78,000.
250.
250. Thank you. Now, for us to get the balance brought down or carried down, balance carried down, we'll do our cash inflow, total cash inflow minus total cash outflow. I've said we'll do total cash inflow minus total cash outflow. So who is getting us the figure?
Is a negative 64,250.
Negative
Subtract
54,250.
No, 64,250.
Just a minute, I correct that. So this is 64.
Yeah, negative.
250. So you mark here negative. So now our closing balance for the first month becomes our opening balance for the second month. That means when you go to February, we start off with a negative of 64,250. 64,250.
Mwalimu, a minute.
Yeah.
I want
One person at a time.
I want to ask a question under cash outflow and a total. What have you added to get 78 to 50?
We have added the total cash outflow.
All of it?
Yeah.
Okay, thank you.
Welcome. The other person who had a question?
Mwalimu, I was asking.
Yeah?
Yes, Mwalimu, I was asking.
Yeah.
The cash balance. Why have you, kwa nini tumeomit hapo kwa cash flow?
Cash balance gani? Soma hiyo statement yenye tumeomit.
When we were doing the previous table, where we had in and out, we had listed commission one. There was commission twice, 1% and 2%. Then sale of vehicle. Then we had cash balance.
Of how much?
But
How much cash balance
I
do you
can
have
see
at the beginning? Yeah.
Roman, is it Roman 7?
It says we have a cash balance of how much?
At the start of January 2019.
And now in our cash budget,
to be expected to be.
Now check on first transaction you've recorded in our cash budget in how much?
The cash balance is the cash balance at the start of January 2019 is expected.
Okay.
Or negative. Oh yeah. Okay then.
So you have seen, huh?
Nimeelewa.
Yes, okay.
Mwalimu, the last one. Under that cash outflow, for me, when I add, I get 39,550.
You sure?
39,550. 39,000.
With the salary?
Yes, salary.
No.
We don't have bonus.
Listen, it can't be 39 because fixed expenses alone is 43,000. So there's no way you'll add and get less than
43,000. Sorry. I was adding 4,300. Thank you.
Okay, welcome. We progress. Kindly, because when I'm putting on whiteboard, I cannot see if you raise your hand or if you send a message. So kindly
Mwalimu,
just
niko na swali.
Yeah.
I have a question. I'm confused hapa mali when hapa kwa commission how we get the units. See, like the one for January, you said it's 10 over 100 times the 180,000.
Allow, because we are going to repeat that over and over until we get to April. So allow we do it, and then you'll see, you'll be able to follow up with the subsequent month. So
Okay.
we are going to repeat that part. So now all the transactions you've recorded, we'll repeat them up to March, up to April. So because and the time is running out, let's do it. Then by the time we get to April, I believe most of those questions would have been resolved. So let's,
Okay.
yeah. So now we are in February. Now in February, how many units were sold? How many units were sold in February?
15.
15. So we do 15, we multiply by the selling price, which is 180,000. So how much is that?
$2.7.
2.7. So for 2.7, we collect 1%. So 1% of 2.7?
$27,000.
So we record here 27,000. Then we now want to collect 2% of the sales that we made in January. So how much was our sales in January?
10.
Yeah?
That was 1.8.
1.8. So times 2%.
Still, it should be 36,000.
36,000. That's what we record here. 36,000. So we don't have sale of vehicle. Then now we get the total. So start with the negative 64,250, add the other cash inflows. Who's getting us the answer? Mulieka calculator mbali.
Negative 1250.
Negative 1250. Now we go to cash outflow. So salary does not change. So our salary will remain 26,250. Uh, 26,250. Our bonus. Were they entitled to get a bonus in this month? In February?
No,
Were they entitled to get a bonus in February?
no, because they did not sell 20 properties.
20 property, that's okay. Now, variable expense is 0.5 times the sales for the month. Our sales is 2.7 million. So get 0.5% of 2.7. Hello? 0.5% of
13,500.
13,500. So our fixed overhead will remain 43,000. Mm, 43,000. Then we don't have tax, we don't have interest. So get the total cash outflow. Total cash outflow. That's 26,250 plus 13,500 plus 43,000.
That is 82,750.
82.
750.
So we record here 82,750. And then to get the balance carried down, we subtract the cash inflow, cash inflow minus cash outflow. So negative 1,250 minus 82,750.
Mwalimu, it's supposed to be 83,000.
Yeah.
It's supposed to be 83,000, not 82,750.
Who else has a different answer? Who else has a different answer? I hope hakuna mtu ako klasi kusoma kuandika
I'm
tu
getting
notes,
82,750.
82,750. Another person, a third person to Sydney.
82,750.
So it's 82,750. Okay. So now we are doing 1,250 minus 82, negative 1,250 minus 82,750.
Minus
81,500.
Yeah.
81,500.
No, it can't be 81,500. Negative 1,250 minus 82,750.
minus 84,000.
Minus 84? Minus 84,000. So, and you have said that our closing balance for February now becomes our opening balance for March.
I have a question.
Yes.
Here in commission 2%.
Yeah.
How did we get that 6,000?
How much? Because we were in February, we collect commission of 2% for sales in January. So we in January had sold 10 units at 180,000. So we get 1.8 and then we get 2% of 1.8. That clear?
No.
Why not?
Repeat once more.
Yeah.
Repeat again.
Oh, how many units did we sell in January?
In January, we sold 10 units.
10 units.
Yes.
And one unit cost 180,000. True?
Yes.
Yeah. So we add, we did 2% of that 10 units. 2% of 1.8 million.
Mm-hmm.
Yeah, that's why we get to 36,000.
Oh, yes.
That's clear now.
Yeah.
Okay, so we progress, huh?
Yeah.
So we are on the in March. We have already recorded the opening balance. How many units were sold in March?
$25 units.
25.
Huh?
25.
25 units, huh? So that's 25 units. We multiply by 180,000. 25 units times 180,000.
Four
Four
point
point
five.
five.
Yeah, 4.5. So we get 1% of that, 1% of 4.5. Hello, class.
45,000.
45,000. Then 2%. Now 2% will collect.
45K.
2% will collect for sales that were made in February. So how much was our total sales in February? How much was our total sales in February?
15.
Yeah, 15. Okay, 15 times 180,000.
45,000.
Just a minute. 15 units times 180,000.
2.7.
2.7 times 2%.
54,000.
54,000. So you record here 54,000.
2.7.
Yeah. Yes, it's 2.7. That's the total, but we are only collecting a commission of 2%. So 2% of 54,000, you need 2.7, we get 54,000. So now let's get the total for cash inflow. Negative 84,000 plus 45,000 plus 54,000.
15,000.
Yeah?
15,000.
15,000. Someone has to confirm?
15,000.
15,000.
Okay, all of you have gotten 15,000. That's good. So we record 15,000.
15.
So we go to cash outflow. So in cash outflow, our salary will still remain 26,250. 26,250. Did they earn a bonus? Did they earn a bonus?
No.
Someone else to second that or oppose? For the month of March, were they entitled to get a bonus?
Oh, I'm sorry. Yes, yes, yes.
Yes. Yes.
For how many units?
5.
For 5
5.
units.
So we'll do 5, and each employee was earning 140 per unit. So we'll multiply 5 times 140 times 9, the number of employees, to see how much they paid out in terms of bonus. Who has the answer? 9
Six
times 140.
6,300.
Yeah?
6,300.
So we'll record here 6,300. We move on. Fixed or variable expenses, we get 0.5% of 4,500,000.
Sorry, come up again.
We are getting 0.5% times 4,500,000. So how much is that? 22,500.
22,500.
So we record here 22,500. Then our fixed expenses will remain constant, 43,000. Tax we didn't pay, interest we didn't pay, get total. Somebody to get us total cash outflow.
$98,050.
98,050.
Yes.
So we record here 98,000. 98,050. So you know how to get the balance? Somebody to get us a balance. What's the balance?
Minus 83,050.
Negative 83,000.
Negative 83,050.
050. So this is negative. So that becomes our opening balance. Negative 83,050 becomes the opening balance. So we move on.
Can you repeat how we got the bonus in March?
Oh, you'll see how we'll get the bonus in April, please.
Okay.
Because they also have a bonus. Now we go to April. How much was the sales? How many units were sold in April?
30.
Yeah. How many units were sold in April?
30.
30. So 30 times 180,000.
5.4 million.
5.4 million. So we get 1% of 5.4 million.
$54,000.
So we record there 54,000. Then we now commission 2% will collect commission for the sales in April. How much was our sales in April? How much was our sales in April?
5.4. Then 2%. 5.
It was 5.4 or 4.5. In March, how much was our sales? Was it 5.4 or 4.5? It was 4.5. 2% of that. Four percent of 2% of 4.5 million.
90,000.
90,000. So, now we sold motor vehicle. How much did we get? In month of April, we sold motor vehicle. How much did we get?
20,000.
Yeah, 20,000. So we record there 20,000. Now get us the total. Get us the total starting with the negative 83,050.
$80,950.
80,000?
950.
950. Somebody to confirm?
80,950.
Okay. So nobody has a contrary answer. Now, so we move on. We now want to record the cash outflow. So our salary does not change. So it will be 26,250. Then we go to bonus. Somebody had asked how we go to bonus. So somebody to read for us the additional information on bonus so that we don't leave out somebody.
The company had 9 employees who are paid on monthly basis. The average salary per employee is 35,000 per year. If more than 20 properties are sold in a given month, each employee is paid the bonus of 140 shillings for each additional property sold.
So in that case, how many properties did you sell above 20 for the month of April?
10.
10. So 10, we multiply by 140, then we multiply by 9, the number of employees. Because each employee gets 140 shillings as a bonus. So 140 times 10 times 9. What's the answer?
12,600. 12,600.
Yes.
12,600.
Thank you. It's 12,600. So we record here. And then variable expenses is 0.5% times our sales for the month, which was 5,400,000. So 0.5% times 5,400,000.
$27,000.
Huh? 27?
27,000.
Yes, we record here 27,000. And then our fixed overhead is fixed as its name suggests. So still record there 43,000. Then our tax, how much did we pay our tax?
$95,800.
95,800. The record here 95,800. Interest. We were to record interest in March and we omitted. But let's calculate and write it. We will have small adjustment on our figures. We'll adjust by a small figure. So our interest, what percentage of interest do we pay? Somebody to read for us additional information on interest. Point number 5.
Yeah, it says
Yeah.
Farmco company pays interest every 3 months on a loan of 200,000 at a rate of 6% per year. The last interest payment in each year is paid in December.
So it's 6% of 200,000. So how much is that? %6 of 200,000. How much is that?
12,000.
12,000. So 12,000, remember that's the interest they pay for a whole year. So we divide it by 12, so that we get how much do they pay per month?
1,000.
1,000. But they usually pay on 3-month basis. So 1,000 times 3?
3,000.
3,000. So, sorry, we had omitted that. And those are the common areas where you are likely to make a cash budget, especially if you had not identified the transactions. Now you'll find we have to squeeze in between, but a good thing, we had already catered for its place. So record here 3,000. That means it will affect our total. Instead of having 98 and 50, we'll add to it. So our total will be our cash outflow for the month of March. Sorry for the inconvenience. For the month of March, our total cash will not be 98. Add 3,000 to it will be? Hello? 98,000 plus
101,050 shillings.
Yes. Will be 101,050. Then also our closing balance will increase by 3,000. So that means it will be 86,050. $86,050. So we'll also change that, will affect some of our few figures. 86,050. Then the last figure it will affect is our total.
I think even the starting capital in April should be affected. Balance
Yeah, we have
forward.
changed.
Okay.
Starting capital in April, we have changed from 83 to 86. 86,050. Negative, huh? Now I'll get the new total for cash inflow for April. Add afresh the new total for cash inflow in April.
77,950.
77,950. So let me erase this. So had we not made that provision, well, that means we'll have squeezed that transaction, and it's okay. So we progress. We saw our interest is dash. Then now we'll get total cash outflow. Total cash outflow now.
203,850.
203
850.
850. Now, who can get us the closing balance?
I am getting 204,650.
Your total you're getting 204,650.
Yes.
And someone else, third person to break the tie or confirm one of the figure or give us a different figure. It's 204,650.
204.
Okay. So we change this to 204,650. Two or four, 650. Now, who will get us the closing balance? Closing balance, we subtract the cash inflow minus cash outflow. So total cash inflow, 77.
126,700.
Yeah,
126,700.
126,700.
Minus 126.
Yes, it's negative. So that's the end. And that's how we finish up our cash budget. Now you can ask question for those who didn't understand any concept or any transaction, how we posted. I can give you 2 or 3 minutes. We respond and then we adjourn the class. Anybody with a question or concern?
I just have a concern.
Yeah.
Yeah, at any point, for instance, you omit the 3,000 that we had omitted.
Yeah.
And then you solve the question to the end.
Yeah.
What happens?
You will not get your full score because it will not give you the correct answer.
Oh, thank you.
Welcome. Another question or concern? Another question or concern? If there's none,
yeah. How many minutes? How many minutes are usually given for solving such a question?
No, for exam, your exam is 3 hours. Huh? So how you manage your time? Time is part of the exam. Huh?
Okay.
Yeah. So if you are able to do it very fast, the better. If you are not able to do it very fast, then you'll be time back because time is also part of exam.
Thank you.
Yeah. But now to increase your speed, you also increase your practice. Huh? Because if with this one you have done, we have taken about an hour or so to solve because it was first time. Every transaction members have to ask so that they seek clarification. But if you practice twice or thrice, you solve several of them, it's much easier for you to interpret that information, and you can solve this question with at most 30 minutes. You can do it with at most 30 minutes. Another concern? If there's none, I wish you a nice weekend. Let's meet in next Saturday. I know I'll not be within Nairobi. Wherever I'll be, I may not be closer to internet connection, so I'll not be able to attend to you next week. So we'll meet after next week. The following week, we'll meet in November. Yeah, we'll meet in November. Though you can be reading about costing method, and the costing method, there are two subdivision. We have process costing, and we also have contract costing. So you could be reading the notes because they are available on the learning management system, so that we can see if we can do both methods. We can do practical for both methods. And then your CAT, I believe you are able to access your score. Anybody who has not accessed his score for CAT and work-based? Anybody who is not able to access his CAT or work-based scores, you can let me know.
Mwalimu,
Yeah,
the work-based, was it out of 30 or 100?
it was out of 30.
You've marked, mine is out of 100.
No, it's marked out of 30. I
Uh-huh.
know the system was set to analyze.
Okay.
So you'll find they have given you a score out of 30, and then they have also given a score out of 100.
Yangu ni out of 100, the WBA.
No, hebu angalia, utapata kuna score imeandikwa out of 100 and then kuna score out of 30.
Okay, let me check kama hiyo ya out of 30 iko.
Yeah, check. There is, I know.
Okay.
Sir.
Okay, thank you.
Another question or concern? So let's meet after next week. Have a wonderful evening and have a wonderful weekend. Let's pray for each other and meet when God allows.